Good morning, traders. Welcome to another edition of the Daily Market Outlook. This is Aaron Hill from FP Markets, and today is the 23rd of September. So all eyes were on the US Federal Reserve during US hours yesterday. The central bank kept its overnight interest rate. This is the Fed funds rate near zero, a target range of 0 to a 0.25%. The monetary policy statement and subsequent press conference from Fed Chair Jerome Powell laid the groundwork for tapering. The Fed said if economic progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. For those who follow the Fed language, you'll note that this is, shall we say, updated language from the central bank statement from the last meeting in July, which had only mentioned the FOMC would continue to assess the progress in coming meetings. We also saw the Fed state it sees 7 rate hikes in its forecast, which, if you remember, was 2 previously, and for the year 2022, the bank now forecasts at least 1 rate hike. At the Fed Chair Powell's presser, the head surprised by hinting at the possible parameters of the upcoming taper, and stated that tapering could be concluded by the middle of next year. So where are we in early London? Euro and pound are, moderately mixed at the moment. The euro is euro against the dollar is marginally higher at 17.10, and that comes in at spot 2%. The pound against the dollar is up, the same by spot 2% at 36.53. The dollar exhibits a clear upside bias with the commodity currencies. With the commodity currencies, the Aussie dollar, the Canadian dollar, and the New Zealand dollar, all largely higher this morning. As for the safe havens, the Japanese yen and Swiss franc, we are mostly lower, as you can see. This fits well with a reasonably evident risk-on scenario coming out of the equities space this morning. As you can see, US equity futures, as you can see, are higher across the board, as are European cash equity indices. As you can see, the FTSE 100 is up spot 4%, the DAX up by 1%, and the CAC 40 up spot 8%. We can also see bond yields are mildly higher this morning. This fits in with the risk-on scenario as bonds move lower. Right, so where are we in terms of economic news? So we recently had the French and German flash manufacturing, flash services PMI, flash manufacturing and flash services PMIs, which were pretty disappointing. Eurozone flash manufacturing and flash services PMIs have just come in as we're recording, and again they're disappointing compared to prior results across the board there, guys. A key release to be mindful of today, however, is the Bank of England policy decision at 11 a.m. GMT. This is set to my time at BST. Though do take into account that no change is expected to the bank rate or asset purchase program. Now, just moving swiftly over to the charts. We have the euro dollar. Now, for those who follow our Twitter or the daily market analysis, you will note I highlighted this daily Quasimodo support at 1689. This was strategically positioned according in terms of the lower time frames. Now you can see this comes in at 1689, as I said, which sits just below the 117 handle on this is the H1 time frame. As most market technicians will know, round numbers do tend to attract attention, and by extension, they attract orders. And below here, we would have had sell stop orders in terms of traders looking to sell the breakout below this round number, and also obviously stops from anyone attempting to fade this psychological level. In addition to this, we also had the decision point on the H4 time frame at 1690, 1705. Now we popped below this and took out likely a truckload of stops below this area as well. So not only did we have this decision point whipsawed, we also had the round number whipsawed into the daily Quasimodo support here. This is an ideal area to have considered a long position. Next up on the curve, we have the Aussie dollar. Now, right now, we are testing prime support on the weekly time frame, and that comes in at 69, 68, 74, 72. Now, as I said, this is on the weekly time frame. We are seeing a hesitant tone right now this week. But nevertheless, this is prime support, and we should take this into consideration. However, on the daily time frame, we are seeing room for the for price to actually continue lower until we shake hands with the Fibonacci support, which I believe comes in at around 70.48 to 71.26. Does this mean that price will continue to dive into this prime support on the weekly time frame? Your guess is as good as mine with this. I believe that we will see some bullish action coming off of the upper range of this area, as this is a weekly time frame, and the higher time frames generally tend to take precedence over the lower time frames. Now on to the H4 time frame, we are seeing a resistance at 72.81 has recently come in. This came in during the Fed announcement yesterday. But as you can see, the bearish narrative has worn off just ahead of this decision point at 7200, 7218. This is a nice area to be watchful of, because there are likely going to be stop loss orders below these lows here. Now, in terms of the H1 time frame on the Aussie dollar, as you can see, we did have price spike above this trend line. This cleared out a truckload of stops above this trend line. As you can see, this has been going on since the September the 7th as a trend line resistance. So as you can see, we spiked above this area, likely cleared a truckload of sellers out of the market here, and we tested a Quasimodo support turned resistance at 72.88, which aligned nicely with a mild Fibonacci cluster at 70, I believe that's 72.89 and 72.85. You will note this also has the 100% fib projection, which for any AB equals, any harmonic traders will note this is a harmonic pattern. So as you can see, we come back below the trend line here, but in early hours we have seen a break back above this trend line, which kind of is in line with our weekly direction here, and could eventually see price break above the H4 resistance, and by extension, obviously, may leave the Fibonacci support on the daily time frame unchallenged. Now, switching things over to the dollar yen, the main point here I wanted to highlight was we are approaching the 110 figure. This is on the H1 time frame. I've applied this level to. What I like about this level is that there's guaranteed to be breakout buying interest above this area, as well as stop loss orders from those attempting to sell this round number, as we did get a reaction on the 17th of September. What I am watching is the 110.11 Quasimodo resistance base as a place where price could whipsaw to and possibly generate a bearish wave. Lastly, we're on to the pound dollar. And my main thing here that I really wanted to get across was on the weekly time frame, we are touching a supply turn demand area at 36.29, 34.56. This is a major area, a long-term area. But on the same side, simultaneously, as we're touching this supply turn demand, we've also broken the neckline of a double top pattern, which could, as most pattern traders will acknowledge, tempt a bearish scene. As going against the weekly time frame, we do have Quasimodo support in play on the daily time frame. That comes in at 36.09. I do believe, as I've said in the daily market analysis, this is a weak area now, primarily because of the reaction on the 20th of August. Failed to find acceptance above the 200-day simple moving average, which is currently at 38.36. Now, if we get a break below here, this does indicate we have weakness around the supply turn demand on the weekly time frame, and almost strengthens the idea that the double top pattern on the weekly time frame could actually play out. With this, we're moving over to the H4 time frame, so more of a shorter term view. I am really looking at this decision point here at 37.50. 37.21. This is positioned very, very nicely above the resistance, which was actually a Quasimodo support. So it's a Quasimodo support turned resistance at 36.93. And really, my main interest in this decision point comes from the H1 timeframe. Look how close the round number 137 is located, just below that decision point. This has whipsaw written all over it for me. So a whipsaw above the 137 level on the H1 into the H4 decision point could tempt a bearish setting. So that's it from me today, traders. Thanks for your time. Trade safe, and I'll catch you on Monday.